So I'm done counting all the parts. Now what do I do? Let's ask Jerry. Hi everybody, thanks for joining us. We're the DCSI Parts Guys. We're brought to you by Dealership CSI. We're powered by ESPM. And today we're going to get into the final step of all this counting parts and inventory stuff. We're going to get into the reconciliation. I'm Rick. Here's Jer. Good morning, Jer. How you doing this morning?
Doing real good, Rick. Looking forward to this segment here because it's really the important part of it for the office and the general manager and the dealer principal.
So exactly what's the reconciliation all about, Jer? We keep hearing that term thrown around. We know it's the dreaded final verdict on inventory day, but what's really going on with this, Jer?
Well, Rick, it's really just trying to match up and make sure that we've got everything accounted for in both the financial side and on the inventory DMS side or the pad side, whatever you want to call it. We want to make sure that those are in very close proximity. The guide here is plus or minus 2%. And you need to make sure that the owner knows where all of his money is accounted for. So that's what we're trying to do, is make sure that he knows how much money he's got invested in that parts department.
So is this just something you want to do on inventory day, or is it something you do on a more regular basis?
Well, Rick, on inventory day, obviously it's critical. And that's kind of like the final judgment or the annual judgment of where we stand with that reconciliation. But I want to do this on a regular monthly basis because I don't want to wait for that physical inventory to find out I'm 50 grand short, 70 grand short, 100 grand short. We want to make sure that it's accurate all throughout the year. If we don't, then we have a whole lot of stuff to go through to try and find any discrepancies. If you're trying to go through 12 months worth of data to figure out where you went off, it's a lot of work to do and very time consuming. If we do it on a monthly basis, it's much easier to keep track of and to keep it in line.
So, Jared, some of our viewers out there might be familiar with the old GLs and the big giant books that all the information was in. And to your point, I remember years ago we had an inventory problem and we took over the conference room. We set out 12 of those big giant general ledgers, all the payables for every single month, and we started digging. And man, I'll tell you, what a project. So you're absolutely right. If we start looking at this stuff every month, we get some huge variation. Much easier to look at 30 days worth of activity than it is to consider 12 months. And in a lot of cases, if I just wait for the 12 months, virtually no way I'm going to find that kind of stuff. So let's look at our reconciliation sheet, Jer, and maybe you can walk us through the parts side and see what we've got to do to kind of make all this stuff match up.
Well, Rick, on the parts department side, you start out line one with your computer system inventory value, which is you take it off of your monthly management report. You can run those management reports month to date. You can run it for the end of the month. If I'm doing this monthly, I want to go with the final management report. Obviously, put in the total inventory value right off of the report on line number one. On line number two, you've got any inventory that you've charged to your inventory account on the financial side, but maybe we're not tracking on the computer. That really, I don't like to see anything in there really, because everything we have should be accounted for on the DMS and on my pad. So line two really should be close to nothing, if anything. And then on line three, obviously, we have work in process for repair orders. You need to know, obviously, those are parts that we've charged out on repair orders, and they haven't been closed out or they haven't been accounted for and paid for. So they're going to make a big difference when you're reconciling against that general ledger side. So we need to know exactly what the value of those are. Line 4, we've got the counter tickets. Those same thing. It's an open invoice that hasn't been processed, hasn't been closed out, hasn't been paid for. So any counter tickets that are open, maybe we're waiting for a delivery for the next day, or we've just held those out there and not closed them out yet because we're waiting for some special order parts, anything like that. That'd be a work in process counter ticket. On line 5, you can see we have clean cores on hand. Those usually aren't accounted for in the value on the MGR. It's a separate line on the monthly management statement. So you have to have the value of all the clean cores on hand. You can get that obviously off that management report. You can run a PHR report on CDK, which shows you the core value. But it's anything, the on hand times the exchange value of any of your remanufactured parts on hand. Dirty cores, you got really 2 areas of dirty cores. You've got any dirty cores that are waiting to be sent back. Those would be, not paid for, obviously. So we have a core value and we need to account for that. We also sometimes overlook those warranty cores that we're hanging on to. When we charge out remanufactured parts on a warranty claim, we don't get to charge out the exchange value, so you still have a value in that core until that core either gets called back by the manufacturer and paid on a claim, or they just send them back as a dirty core. But you got to account for both of those and make sure that they're accurately tracked. So you want to keep them in a place where it's easily accessible that you can take a look and count those at the end of the month to come up with a good value on those. The other thing you want to keep track of, obviously, is any monthly returns or any returns you've sent back to the manufacturer and haven't been paid on. So I like keeping a list of all of my returns. Any parts that gets returned, I print off a report of that, and then I hold on to that until I've received my credit. Once I receive my credit, then obviously the general ledger is going to match up with that. But if I don't have a credit for it, it needs to be accounted for on line 8. Total those all up, and you come up with your adjusted computer system value, and that's the one that we're going to try and match up with the business office value or the general ledger inventory value. So, Rick, you can kind of walk us through that side and explain what's on that side of the reconciliation report.
All right, Jaron, as you can see, everything on the reconciliation on the part side that we're talking about, this all gets added to the pad value. So you start with a number in line 1, and all of these entries are adding and increasing that value, because what's happened is the DMS system has been relieved of that value, but the general ledger hasn't got paid for it. So we need to add it back in because we know these still exist, and we want to make sure we're balancing out against the monies that the GL is still waiting for. The other point I wanted to just throw in there real quick, Jer, on the final value of parts pending, return pending credit, or even the cores pending credit. There are some dealers that use an accounts receivable setup to take care of the accounting on those particular issues, and if you're doing that, you have already accounted for it in the GL, so you do not add those back in. The only time you use that, those 2 lines, are when you keep count of what you've returned and you're waiting for credits and you have not told the business office about it yet. So you always want to think about the communication between you and the GL on this stuff, and a lot of times it makes sense when I want them both to come up to the same level. What do I need to do to tell the GL something happened, and what does the GL do to make some arrangements for that? So looking at the GL side, and by the way, we said this in our last video, but in any contest of who's right and who's wrong, the GL wins. So we need to make sure that we're very accurate compared to the GL. And line 1 is where we'll get the general ledger inventory value. Now, some of you are able to pull that number yourself. Some of you have to get a hold of your business manager and ask for that. The timing on when do I do this, on inventory day, we have a clean cutoff. So we know that the whole world is stopped on both sides. We're not buying and selling parts. We're not going in and out of the GL. And so we have a dead cutoff that makes things easy. When we're doing a monthly reconciliation, we have just kind of a soft close, and so we just need to kind of pick a time. And for me, the best time is, when did I pull the DMS data, which is over here on the computer system value, usually end of day of the last day of the month. And that's when I would ask the business office to give me that general ledger value, so that we're somewhat in time. And we're going to get a little out of time here, and we'll talk about that in a few minutes when we show you the graph. But the important thing is that we have numbers that are relatively close in terms of timing. And the next category we want to concern ourselves with is the monthly price tape adjustments. So if I get a price tape adjustment every month in the parts department, I will look at that number, and that number actually will be either added or subtracted from my DMS. So if I had a part that was $100 and now it's $120, that $20 is going to be reflected in my DMS value. It's going to be increased. But the GL doesn't know about it until I tell the GL. So that particular entry on line 2 is designed to let the GL know that I had this $20 appreciation, and the GL will handle that accordingly. Now, I want to make sure that my business office hasn't already made that adjustment in the GL value. Sometimes they adjust them every single month, but most of the time it's an ongoing adjustment that we use as a memo adjustment, and then on inventory day they make the final and clean it all up. But we still need to communicate that, because the only way the business office knows that number is for the parts department to tell them about it. Unposted vendor discounts, unposted freight. There's some odd situations that could cause some out-around numbers, and if you've got vendor discounts, make sure those were handled properly. And if you've got freight and handling charges coming through on your invoices, make sure those are being posted to the proper accounts and not to the inventory. And if they have been, we can make some adjustments here. So then you get into the value of parts received, invoices not posted. So I'm in the parts department, I get this order in, it goes into my DMS, but I haven't gotten the invoice yet. So the business office, the GL, doesn't know that that particular transaction took place. The count is in my DMS side, so I got to tell the GL about it to bring those two up so they're equal. So in that case, I would throw that in. And again, there's a timing issue there, and make sure we're not doubling up on anything there. And same way, value of parts invoiced and not received. So the business office gets an invoice for whatever, and you haven't received the parts, but they've already paid for them. Well, if that's the case, then I need to make that adjustment as well to make sure that the GL now is reduced, because I don't have those in my DMS. So at the monthly reconciliations, a lot of this stuff is a little off time, so we're not going to be perfect with it. But on inventory day, there's a hard close, and what Jerry was talking about earlier in our prior video was we need to mark invoices before inventory and after inventory, and this is exactly why, so that we can set aside the ones that we're not going to count in this cycle, and we'll deal with those after the inventory is over. And vice versa, if I know that it's before inventory, the DMS has value, I need to make sure the general ledger has value. So then when we're done, down on the bottom, we do all the math, get that number down here, we compare the two, and we can see exactly where we are. I like to have parts manager and business manager sign these, date them, and I like each business manager and parts manager and even the GM or owner to get a copy of these every single month, especially as a parts manager, because for me, this is my reconciliation, this is my responsibility, and I want to show that I'm coming into these numbers every single month. And like Jerry explained earlier, the big problem is when they go wacky, now I got trouble. So, Jerry, take a look at the graph that we have, and this is basically a little graph you can put together, and you can see the dark lines are the pad, and the pink lines are the GL. Explain what's happening on this one, Jer.
Well, at any given point in time, Rick, there can be some discrepancy. Like you said, on a monthly basis, we're looking at a soft close date. So we've got quite a bit of variance there. If you look at January, we still have a big variance in February, but it really didn't change too much. It grew a little bit, the variance, and then all of a sudden in March, we went the other way, where you can see that the pad is actually higher than the GL. So, like I said, the guideline for me on a monthly basis is probably plus or minus 5% from the GL number. And if you're staying within those guidelines, it's okay. But you really want to watch the trend. And you can see, I don't know, for some reason here on this graph you have, Rick, once we get past April, we seem to be pretty close to the GL. So really nothing to worry about at that point, and you just move forward. And one of the things I want to go back to, Rick, though, on that reconciliation sheet, you talked about line 2 on the reconciliation sheet, and that's the appreciation-depreciation factor. Different dealerships handle this differently. Some people take that adjustment from the appreciation every month. Some people wait till that annual physical inventory. So on line 2, if they're waiting for that annual physical inventory, you need to make sure that that line 2 is a cumulative number. And it would go all the way from that point when we last reconciled those appreciation and depreciations. So it's real important to make note of that, because if we're not doing that cumulatively, we just put in the monthly number, we're going to have a problem. Because many of the manufacturers now make adjustments to the cost, price, or whatever on a monthly basis almost. Some of them are biannual or semi-annual, but I've seen quite a few where there's some adjustments every month on that.
Good point, Jer. And that is, very specific to each dealer. Some dealer groups and some of the public companies handle those different. So as a parts manager, I need to know how we're handling it, and to accumulate that value is really important, because if I had a $20,000 or $30,000 swing one way or the other at some point in the year, I want to make sure that that carries through, because if I counted for it this month, pulled it out in 2 months, now I'm all of a sudden going to be off the whack. So make sure that you understand how your store handles it, and that you and your business manager are working together to get the right numbers, so that we can get some semblance of accuracy with this. And if I'm watching this, like we said earlier, if I'm watching this thing every single month, and I know that I'm getting some ups and downs, but for the most part we're sticking together, I've got a pretty good feel on inventory day that there's not going to be a big surprise. And let's face it, as a parts manager, that's the most stressful day of the year, because if I come up with some big surprise shortage, what am I going to do? Where am I going to start? How am I going to get through that? And does that mean that they're going to start pointing fingers at me? Are we stealing parts? Or what's going on? So it creates a big problem. So I'd rather adjust as we go. I'd rather know exactly where I stand, and make sure that all the details are taken care of. And again, if I do this 12 times a year, pretty good indication of where I'm going to be on inventory day. And that's really what I want to get to. So, Jer, if anybody wants to get a hold of us and get a copy of our reconciliation sheet, or get some information about how they can do some of these things in their store, how do they go about doing that, Jer?
Well, Rick, it's pretty easy. Obviously, if you're watching us on YouTube, you can subscribe to our channel. First of all, give us some likes. But if you need to get a hold of us, just send an email to the DCSI Parts Guys at gmail.com. One of us will get back to you in no time, and you can go from there. Like I said, the reconciliation form is available. Give us any questions you have. We'd like to hear from you.
Well, and also you can get a hold of us through our website, dealershipcsi.com. And we have a lot of good information there. We have a whole backlog of our videos there. And any of our clients know they can get a hold of us through their own personal consultant. But if you want to talk to Jerry or I specifically, or if you're not a client, email us, get the phone numbers off the website, give us a call. We're happy to help you do anything you want to get done, pass some of this information along, and help you run a better parts department. So, Jarrett, thanks for joining us today. I think we had a lot of good information.
Well, Rick, it was a good show, and hopefully we got some more coming down the road. Continue to watch us on the YouTube channel.
That's right. If you like us, give us a thumbs up, subscribe, tell your friends and neighbors all about us. And until then, let's go make some money.